Hey guys, welcome back to Snowball Investing. This is going to be a special kind of end of year Christmas portfolio update where I'll look through the stocks, but what I also want to do is talk about how I've done year to date, talk about any lessons learned along the way, and kind of what my plans are for next year and the kind of foreseeable future. If you haven't done so already, please like and subscribe as it really helps the channel grow. I'm above 400 subscribers, which is absolutely fantastic. I know it's quite small compared to other YouTubers, but when I started this channel, I didn't even think I was going to get 50, so thank you very much for that. But without further ado, let's jump into the stocks and shares ISA. The value of the stocks and shares ISA sits at £73,434 and is in the green by 18,506, which I'm very happy about. Looking at the graph, which is a kind of maximum time horizon of this portfolio, you can see it's been quite the journey. So I started investing back in 28th of December 2021, and it's fair to say I've had my ups and downs. Obviously recently we've had a fantastic run up, although there were periods where things weren't performing as well. For example, from 4th of August 2022 to around 4th of May 2023, the portfolio didn't really move, and I was still investing a good chunk of money every single month. Looking at the yearly chart, you can see the performance has been pretty outstanding. So the value about a year ago was around £28,000, and it's pretty much gone up in a straight line all the way to the value it sits at now. And obviously partly that is due to macroeconomic conditions. Inflation seems to be going down, but I think it's also the fact that I bought very heavy when things were very discounted, and buying very good quality undervalued stocks, which I'll kind of touch on a little bit. So how's my portfolio done compared to the FTSE All ETF? My ISA is up by 92% on a time-weighted rate of return, where the FTSE All ETF is up by 15.88. Am I likely to see this performance every single year? Very, very unlikely. I think it was one of those situations where things were so depressed post-COVID, interest rates were high, and I was buying very heavily, that when things rebounded, they rebounded pretty hard. So I don't expect to see this performance. I'll be happy outperforming the FTSE All ETF or S&P 500. So I guess this is a good time to touch on some lessons I've learned over the 2 years of investing, and I am by no means an expert when it comes to investing. This is absolutely not financial advice. These are just things I've learned and picked up along the way, and I'm sure my thinking and the philosophy in investing will evolve over time. I think lesson number one would be focus on your income. I'm in a very fortunate position where I can invest £20,000 every single year into a stocks and shares ISA, and even have some extra to deploy into a general investment account. And the only reason I can do that is because I've worked my arse off and focused on increasing my income for the past 10 years. And now I've got a good, large, steady income stream where I can put that into investing and really develop that compound interest or that snowball effect. So if you're in a position where you're not earning so much and you're spending a lot of time trying to pick stocks, I instead would recommend focusing on stable, easy, low-cost index funds, but focus your time and efforts on increasing your salary, whether that's through training or finding side hustles. I think that really is the key to really becoming wealthy. And to really illustrate this, let's look at the trusty old compound interest calculator, which I'm sure you guys have seen before. But if we take an initial investment of zero, interest rate of sort of 7%, which is fairly reasonable, over 20 years, if you're able to put £100, let's see what your return would be. So that total return would be £52,092, with the interest earned just being over £28,000. And that is, pretty good return, but it's not going to help me retire. And I think one of the reasons is compound interest doesn't really take effect, or to the full effect, until you get to larger sums of money, as in hundreds of thousands of pounds. So you can see in year 17, 18, 19, you're getting £3,000 interest, and that's starting to grow, but it's not where I want to be. Let's instead increase that £100 to 1,666, which is pretty much what I put into my stocks and shares ISA every single month, and hit calculate. So you can see a much better future investment value of 867,000, with the interest earned a massive 468,023 pounds. And now let's look at the power of compound interest. So you can see as soon as you get to the kind of £100,000 range, that compound interest really takes effect. So going from 7,000 a year all the way to around £50,000 in interest in year 19. So this is what I'm trying to focus on is, yes, I want that, great rate of return, but it's really to put as much money as I can as early on in my investment career and let that compound over time and really get that snowball effect going. The second lesson is tied in with the first. It is, do not obsess over your day-to-day performance of your portfolio and don't let it take over your life. And what I mean by that is when I started investing, first 6 months to a year, I would check my portfolio every single day, 50, 60 times a day, and it would almost take over my life and distract from work, it would distract from family, and overall it just wasn't good for my mental health. What I do now instead is maybe I'll check my portfolio once, twice a day, maybe some days I don't check it at all, but I generally only buy on Fridays, so based on how stocks are doing or things are overpriced or if there's great deals in the market, I will deploy a chunk of cash every single Friday of every single week. And that way I'm not focused on the day-to-day prices. I know I'm going to invest every Friday. I'm a long-term investor. I may not get anything perfectly at the bottom, but that's absolutely fine with me. It's just a much better way of dealing with it and a much more balanced approach where investing, even though it's a good part of my life, it does not take over my life. The third lesson I've learned is the weightings of my stock reflect the conviction in the stock itself. And what I mean by that is, the larger the position is, the more conviction I have in that stock based on research I've done, things that I've read, articles, the moat the company has, and it's just the overall confidence in the stock. And I think that's kind of apparent based on my number one holding, which is Palantir. So I spent many days researching, just watching videos, and you can see it's a very large portion of my portfolio. So it's £30,000, which is probably just under half. Where something like Enphase Energy now £1,000, even though I'm bullish on this company, I don't have as much conviction. Another one is Ginkgo Bioworks. Again, the speculation plays in my portfolio, even though I like and I want to dabble in it, I make sure it is not the only position. It's not such a large position where it's going to really negatively impact my portfolio. I think the last lesson, and it's probably something you've heard a lot, which is time in the market beats timing the market. Although I think time in the market does play a little bit of a factor. So I have continued to buy since the start of this portfolio, but I may adjust how much I buy based on the market sentiment. So when things were in extreme fear last year, I was buying extremely heavily, and now things are in kind of extreme greed sort of range. I've sort of pulled back to my buying a little bit and holding a bit more cash. But regardless, every single week I'm buying. I may adjust the amount I buy in stocks, but I continue to buy, and that's partly because I'm a long-term investor. So my time horizon isn't a week, it isn't a month, it isn't a year. Realistically, my time horizon is 10 to 20 years. So I know if I continue to buy great companies at great prices, I'm going to do well. I may dabble in some speculation plays, and that's a bit for fun, but a large proportion of my portfolio, I think, is in what I think are great quality stocks. So that's enough of my pearls of wisdom. So let's now have a very quick look at some of the positions and how they're doing recently. Palantir is holding up still pretty well, so that's up 72%, although it is off its kind of recent highs. Year to date, 177%, which is pretty insane for a stock. Obviously, I sold £2,000 worth of this at sort of the $21 range, but I did buy about £1,000 back in when it dropped under 18. As I said, no, I am timing it a little bit, but realistically, I want to hold this position long term. If it does get what I think is overpriced, I may trim a little bit, but if it drops in price, I will, definitely buy back in. FTSE All ETF, that's up a very nice 11.4%. I mean, this kind of goes back to my original point. If you had £100,000 in the FTSE ETF and it went up by 10%, you've just made £10,000 on a relatively low risk ETF. So focus on increasing your income and the amount you're investing in some of these positions. Given Jerome Powell's recent talks about cutting interest rates next year, that's been very bullish for kind of more speculative small mid-cap stocks, and that's representative of SoFi, which is up 32%. Wish I bought more, but obviously hindsight's 2020. Truist and SL Green Realty continue to do quite well, and they pay me, well, I think in December I got paid around £40 just off dividends of these two companies alone. I am not married to any style of stock, whether that's growth or index funds, so if dividend stocks present opportunities where I think they're undervalued, then I'll absolutely buy them. And, it's very nice seeing a little dividend payment on your portfolio or a notification. That dopamine spike can be very addictive. It will be very interesting to see how the big tech stocks like Alphabet and Microsoft perform next year. They've had an insane run up this year. So my expectation is, how much more they're going to go up next year. Over time, I think they will go up, but I think the opportunities are in the small to mid caps. So I may buy a little bit more of the big tech companies, but I am more focused on the small to mid cap for 2024. Talking about the small to mid caps, they have had a pretty crazy run up recently. I mean, Enphase Energy was down probably about 10-15% in this portfolio. Now it's up by 21%. So some of these moves in the small to mid caps are very extreme. DraftKings has been one of my very good positions and good picks because that's up, over 113%. Whether that will last, we shall see about that. Even though I have bought some UK stocks like UK Property and Persimmon, I am not convinced around the inflation in the UK. I think US is probably in a much better position. So even though I've bought a little bit, I've not bought too heavily. So if the UK can't control its inflation, I think there will probably be great opportunities in the UK market, and I'll be keeping an eye out for them. But at the minute, I am not buying any given the recent run-up, but we shall see what happens in 2024. You can see some of the kind of smaller positions there. Rocket Lab, that's just shot up in the past day given a government deal they had. That was a position I really wanted to build out. As a kind of a smaller cap stocks, Ginkgo Bioworks is another speculation play. So I may look to increase some of these positions given they are quite beaten up. But the majority of my portfolio, I think, going forward will be focused on higher quality companies that are, get profitable, buying back stocks, etc., and have a smaller 5 to 10% position in some of the more speculation plays, which keeps me interested in investing. So that concludes the Stock and Shares ISA. I do have 10% of this portfolio still in cash. I think there'll probably be a small pullback in the new year, whether that's Q1 at some point, and when it does, I will be buying more heavily. But my approach is still the same. I invest £1,666 every single month. My plan is to max out the Stocks and Shares ISA. I will probably stay on free trade just because I want to see all the stocks in one portfolio. But I am very hopeful for 2024, especially if inflation stays lower and goes lower. But regardless, I buy the dip, I continue to invest, and 10-20 years back, hopefully I will see the results of that. So the history around the general investment account is wherever I've maxed out the Stocks and Shares ISA and that £20,000 limit, I put any extra cash I had into this general investment account, and I really utilised this when the tech stocks really beaten down and I was putting a lot of money every single month. But at the minute, I have not added any more to this. I'm probably not going to add any more. Any additional cash I'll add to my Vanguard GIA. But to give you a quick update, the value there sits at just under £16,000 and is up by a healthy £3,876. So how is this portfolio compared to the ISA? Well, for the past year, it's up still a very nice 57%, so outperformed the old ETF, but it isn't as successful as the stocks and shares ISA, but still overall very happy with the returns of this account. Having a quick look at the positions, obviously it's heavily weighted in big tech. I was buying Meta and Alphabet very heavily when it tanked, and that's paid dividends, not obviously literally, but Meta being up 121%, very, very happy with that. Even Amazon, that's up 42%, Intel up 35%, so big tech has done very well. The recent buy was Enphase Energy. I was buying that when it kind of dipped a bit and it continued to drop, and I think this position was down 35% at one point, but obviously that's rebounded. So I'm keen to see where Enphase Energy can go. Obviously it's not a huge position, but it's, I think, just enough based on my conviction in the stock. So I'm keen to see where solar is going to go. I think the adoption is going to increase, but how much, and the competition around this. So I think overall I'm very happy with my Enphase Energy position in this account, and I'll be interested to see how it performs going forward. So I think that's all for the general investment account. So let's move over to the Vanguard account. Taking a look at the Vanguard account, the value there sits at £13,230. As you can see, it's made up of entirely the S&P 500, and it's been performing fairly well. It's up £1,525. So I continually invest £200 every single month, and that's not going to change for 2024. If I do have any additional cash above and beyond the £20,000 limit of my ISA, I'll put it into the S&P 500 in this account. However, I'm expecting a lot more expenses in my personal life next year, so if anything, I'll continue to invest the £200 and just let this build up over time. So that concludes the end of year update. If 2024 is even a fraction as good as 2023, I'll be very happy. I think there are going to be some interesting times ahead. I'll continue to produce my monthly update videos. If you guys want to see anything different or want me to create other videos, please let me know. If not, enjoy your Christmas, enjoy your New Year, and I'll catch you in 2024.